Hello, Tom Levecchia here with the latest edition of the New Theory podcast. We have a very special guest today. This guest is a sponsor of the NBA Buttman or the show, as well as the New Theory podcast. But more importantly, I wanted to go over what he does and alternative ways to fund your business, something near and dear to my heart as an entrepreneur. But without further ado, Jason Venturelli, co-founder of JSV Capital. Jason, how are you doing today?
Very good, Tom. Listen, Tom, thanks for having me on this gorgeous day in New Jersey. The sun is shining over this podcast here, and I thank you for having me. And I'm excited to tell everyone, especially the business owners out there, the alternative method to business loans and how we can help.
Okay. So for like folks that have businesses that maybe did not get capital yet, we're going to try to have you not run into a wall. So let's first lay the landscape. Let's go down kind of through traditional all the way to non-traditional. What are different routes of funding, just so we can set up a baseline for people to understand?
So, I mean, there's a lot of ways businesses, can go into funding and what they need the funding for. Just regular capital, just capital for their business.
Correct.
Whether, 50,000, 100,000, just working capital.
Correct.
Everyday needs, to pay invoices off, payroll, stuff like that, right? Expansion, right. Also equipment financing. That's another route. You're looking to buy, equipment for your restaurant, looking to buy equipment, tractor trailers for your trucking company, your landscaping business, your construction company. You go that route. We go commercial real estate. You want to buy another piece of property for your business, or investment property. That's considered a business loan.
So there's different types of reasons to need money. And for those that are watching are probably filtering, if they had that extra money, what they would do with it. So the question is how. Again, I want to go, even though you may not supply, I just want to give the landscape of traditional, bank, loan sources, all the way to JSV and beyond. So just give us a little bit of a background on different types of financing.
So for instance, unsecured capital, we go up to $1 million.
Okay.
So this is a business owner comes to us,
okay.
They don't have to put their home, up, or their boat, cars, whatever they may have, any collateral, they put up any collateral. We're basing it on their revenue, and they come to us and say, listen, I have a business, it's a viable business, there's revenue coming in, I need more, whether it be to grow or whether they're in a rut and they, need to get out of it. So that's an unsecured capital. We have a lot of trucking companies and restaurants come to us for equipment. Whether it's a new oven for the restaurant, they're expanding. For trucking companies, it's the tractor trailers, and so forth. So that's where we come in and we kind of figure out, where do you need this money? What's the future hold? How are you going to grow with the company? How are we going to get you out of this hole? And we'll put you in the right scenario. And that's our job. Our job is to, it's a huge ocean out there. I mean, if you just Google, business loans, the normal guy working his business, he doesn't know where to turn to. There's just so much out there that's just, hitting him. You just Google anything and he's going to get all these ads pop up. Where do you turn to? Where do you go? We simplify that process for you. We're the professionals. We know where to go to get you the best deal, but also which lenders are going to, you have the best odds to get approved for, and that's where JSV Capital comes in.
Okay, makes sense. And I want to give a little context because I have two stories. One I want to share now, one I want to share a little later in the podcast. The first is, and I think I talked about this on the NBA Buttman. Shout out to John Panisi, hopefully watching. It was mid-February 2020, and right before COVID hit, I purchased a home, and I had another home that was for sale. So I was able to, still have the house on the market, but still be able to get this house. So I put less down. I pretty wiped out any cash I had on hand in hopes of selling the other house later. And I have two businesses, a shipping franchise and my media company. And the media company was fine. We were cooking, everything was good. But the shipping balances, for whatever reason, were a little higher. So we had a higher bill than normal. Probably not even higher than normal. Probably between the average on any given month was about $70,000 on both cards, which is normal and consistent with these level of revenue. However, my sister who runs the other business goes to swipe the card. It declines. So she calls me up because usually I'm the one overspending and I'm jamming up the card. So she calls me up and says, call, Amex, and I could use my card for the other business and the clients. So I give Amex a call and like, listen, They're like, you're all within your spending power. Everything's great, but between both balances, you are at $70,000. And I'm like, correct. Like that's actually like normal for us. Like, well, and COVID was starting to brew, and banks started panicking. So like, well, we need like $40,000. I'm like, yeah, that's when it's owed. It's due on the 24th for both companies, and we'll put it through. And like, well, no, we need $40,000 today, or your card's gonna be shut off. So on the marketing side, we need it, and the business side, if you don't pay the shipping agent, they shut you down, essentially shutting down your business. You're not repaired, you're out of business. And historically, I would either have one of two things. I would have that type of cash on hand to bail me out personally and myself an IOU, or access to a line of credit or some business funding.
Right.
So I panicked. I didn't have it.
Naturally.
So I went to the bank, who I'm big on. Like I like TD Bank as a banking source. I think they're very flexible from the old commerce days. Even though they're a big shop, I have a relationship with the manager. I have a banker there. I have a private banker. Like I pride myself on having like the old school banking relationship that people used to have. And the older guys will know and gals will know, be like, oh yeah, I used to walk in, they would know your name, and if I needed money, it was no problem.
We're talking 20 years ago.
I know. I'm an antiquated guy. And I went there and they basically just said, you're SOL, and if you do need money, it's going to take a while. So long story short, I was able to maneuver some things around. I was able to get, Jason at the time, but I was able to move things around and get in advance and settle that to keep my business alive, let alone expansion. That was kind of one time when it was jammed up. I'll get to a positive one later. But you're like, well, Tom, like I watch a show, I watch the other show. Listen, like at the time I had an 810 credit score. I had assets to back this up. I had hard assets to back up. And I couldn't get money.
Yeah. And that's
was scary.
And that's where the market is at and has been for some time now.
Well, so give us. Yeah, go ahead. Sorry.
Yeah, no. It's the business owner struggling to find capital. Listen, people getting a mortgage, right? You got a 620 credit score, 650 credit score. Yeah. Okay, no problem. You have income. They do your debt to income ratio. Okay, we'll approve you for the house. Yeah. Well, guess what? At the end of the day, you don't pay your mortgage, they're taking your house.
Correct.
Right?
Correct.
Same with a car loan. You got a 580 credit score. Yeah. They're gonna take the car back.
Correct.
Okay. Correct. You got an unsecured business loan. Yeah. What are they taking from you? Nothing. Right? And the banks look at it. There's certain deals that are too small for a bank.
Yeah.
Certain deals, it's too risky, too small. The industry is too risky.
Yeah.
Banks are very strict on business loans. And I challenge any banker out there to tell me that if you get a business owner who walks in with a 680 credit score, that you're going to approve them. I know the answer. The answer is no.
Yeah.
700, they're not approving. 810, they're not approving.
Correct.
Okay.
Which is insane. All right. So then, okay. So let's just establish that you're an entrepreneur, business owner. We're not talking about startups. Startup funding is a whole different beast. But you're an established business and you need money, right? So I want to give you my scenario 2. Okay. Scenario 2 was I had at the time an opportunity late of 2019 prior to COVID, of course. Of course, I buy something that crashes right after, but we saved it. Was Digest Magazine, New Jersey Digest, and I needed about $110,000 as part of the acquisition for that, and that was a positive thing. We felt it fit in with our portfolio. We had an online magazine, we have an agency. We wanted to kind of go inch wide, mile deeper in terms of New Jersey content, so it seemed like the right economic and strategy, marketing and business strategy fit. So with that said, I go to TD Bank again. I walk in. I need $110,000. I kind of need it quickly. They turn to me, they're like, well, we'll give you 80. And I'm like, why? There's, well, 2 reasons. Number one, if it's either above 80 or above a certain amount, it's got to go to back office corporate. They're going to pick you apart. You're not getting approved. And number 2, because you need it quicker, I guess pointing to the corner or to the regional office, lower amount, you can get that. I didn't have a choice. So I got 80 there. I needed 30. I just, and so at that point, this is even prior to COVID. So at that point, I didn't sell the other house yet. And I didn't just have a lot of cash. I think I had like 20 grand cash to supplement the purchase. I just didn't have cash. So through MCA, Merchant Cash Advance, I got 30. I paid a fixed structure every 2 weeks, I think.
Yeah.
And I paid it off. Yep. I paid it off in a year as part of the acquisition. That's since paid off. I still owe the other bank But now that business is around New Jersey Digest, digestonline.com. I'll put a link below. It's not, I don't get involved the day to day there. I have a great team. Michael and team runs that. But nevertheless, it helped me get that funding. So those are just two scenarios. One, I kind of needed to save things, but the other kind of wanted to expand. Are those kind of two normal scenarios where somebody would contact JSV?
And before I get there, New Jersey Digest, a very classy, great read, that magazine and the online platform. Very impressed, and yeah, definitely great content on there, guys. So definitely visit the website, and whoever in Jersey and gets that magazine is very lucky. Definitely a great read.
Awesome.
But yes, those are two scenarios there where you're looking for capital, you can't get it. We are the guys, that can come in and help. All right. And I want to be in total transparency here. Okay. So I work with direct lenders. Okay. It's their capital. These are lending institutions.
Correct.
Okay. So, and my company is the middleman. Okay. So it's like, you can go out and buy your own home. You don't need a real estate agent, but you go to a real estate agent and they simplify the deal. You don't, it's like anybody else in their profession. They'll simplify the deal for you. A mortgage broker, a real estate agent, a real estate broker.
But I want to work with you, and I'll give you a reason why. And it's not because it's time, or a little bit maybe.
That's what we do. Instead of going in on your own and not knowing who's going to approve you, getting shut down, and thinking, well, that's the end of the road. I got shut down by my bank, and I got shut down by this lender, and now I'm just throwing up my hands and I'm not going to get it. We come in, and if we knew each other at that point, I would have came in and said, Tom, I can get you that extra capital. In fact, I can get you all of it, but here's a lender that I work with, a direct lender. Now, these are lending institutions. These aren't, Joe lending the money to John. It's a private lending situation. Correct. It's not like that.
Yeah.
These are corporations that strictly do business loans.
Yeah.
That's all they do. They're not a depository institution. They don't do investments. This is exactly what they do. Licensed, regulated, registered in all 50 states. And we work with several of these lenders, and we know which lender to go to get the capital you need, whether it be equipment financing, unsecured capital. We're doing an SBA loan, bridge loans, commercial real estate, invoice factoring. We know the lenders to go to that you have the best possible chance to get approved, okay? And we know how to structure your file together to get you approved. That's the ultimate goal.
Make it happen. But again,
make it happen. Yeah.
Well, here's the reason why I want to go to you specifically is if I go to Google, right, and I find a said institution that's direct lending, and I cut the middle down, right? If they disapprove me, I have to go through the whole process again. I'd rather go to you, stop me from wrong, give you my application, and I call it FIFO, figure it the frig out. And if institution A says no, you have B, C, and D, and you handle that as a broker on my end.
Correct.
That's why JSV Capital to me makes sense from a business standpoint.
And there are no fees. We're not here, you have to take out your credit card, take out your checkbook, and you're going to pay us a front end fee or a back end fee or an application fee. There's no fees to work with us. Okay. We're not in this for free. Okay. Obviously we're in this to make money, but we bring the deals to the lender, and the lender pays us our commission, just like a real estate deal or, mortgage deal. Yeah. We do the same thing, except we do, business loans. Okay. So, you can put your wallet away, and we do not charge you one single dime. And another thing,
which some do,
and some do, there are, people out there or companies out there that charge an upfront fee. Give me $2,000. I'll get you this loan. Back end, if you get $100,000, send me, $3,000. We don't do any of that. Okay. We deal with the lender directly. We pass the lender off to you. Contract goes out, money goes out, and we're fast to fund. We do same day funding. So there's a lot of great benefits that I don't want to get into right now. Let's continue this conversation, but we'll mention that later on.
So we'll put a link below. Right. You can check them out. So when should somebody, because again, in both scenarios, I kind of went to a JSV type company as a secondary measure, but almost as like a cautionary tale. I probably should have went to you. So who should come to you and who shouldn't?
Well, definitely the people that need the money now. Okay. If you need the money 30 days or less, 45 days or less, come talk to us. If you have bad credit score, when I say bad credit score, To us, a 720 is a good credit score, almost very good credit score. So the traditional banks in business lending, it's on the fence. Okay. Now for a lot of other loans, it's a great, you know, for a car loan, it's a great credit score. For a business loan, you're on the fence there. So if you have less than a 720, 740 credit score, come talk to us. Okay. Weigh your options. If you need the money soon, this week, next week, even next month, because traditional banks, again, there's a process, and if it's over 80,000 or 100,000, they got to kick it upstairs and they got to get another approval, and usually that process is definitely over 45 days.
The rates aren't like super low either. I was quoted at, I got my line of credit low, super low, because remember this is at the time around 4% and change, but they were swirling around when I was going through a non-conventional through the bank, 7.5% to 12%. I was like, well, wait a second, like you're a bank, I might as well just use my credit card.
Right, exactly. So, you know, a couple of reasons. Let's go over those reasons. 24-hour approval. We'll get you. Okay, we'll have an answer for you in 24 hours. Okay. Fast funding. So we fund same day. So you accept that offer. Okay.
So once
you sign the contract, and everything's DocuSign now. Even our application is DocuSign. Very simple, fast, easy process.
I don't have to see your beautiful face.
You don't have. You want to? I'll take you out to lunch, no problem. But you don't have to. So fast to fund, fast approval. Your credit score. We work with credit scores anywhere from 500 to 850. Okay. And again, why would somebody with an 850 credit score come to us, or 800? Very simple. They need the money today, next week, in 2 weeks. All right. They want a short loan to hold them off. Maybe they got a job coming up, a couple jobs coming up, whatever it may be. They just need that short-term capital to get them through whatever problem they're having. Okay. And we do soft credit pulls. We don't do hard inquiries. All right. So you don't have to worry about your credit score getting dinged up. You know, when you go for a car and, you know, they're going out to 4 or 5 different lenders, you walk out of the car dealership, you had a 750, and now a week later you got a 730. That's because they went out to 3 or 4 different lenders. Our lenders do a soft credit pull. Okay. It's almost like you're going on Credit Karma or Credit Sesame. Is that the other one, right? And you're looking at your own, you're not dinging up your credit. That's exactly what we do. So again,
which is big, because I remember when I was going for a mortgage, I had a hard time getting a mortgage. And every time I inquired, they kept hitting it and it kept going lower. And I said, wait a second, this is the antithesis of what I want.
Right, exactly. And you know, so those are the reasons why you come, you know, look for us and work with us, because we know where to put your file. We can get you the best possible chance in getting approved. What was that? I think it was 20% of business owners who go to the traditional route get approved. 80% business owners who go out to the traditional route getting turned down. And there's a number of reasons. Again, it's their credit score. It's the industry. Maybe the industry, it's a little too risky for the bank. And they don't want to work with you.
Yeah.
You've been in business not long enough. You've only been in business for a year and a half, 2 years. They want to see more of a track record. 2 years, even 3 years. They want to see tax returns. Okay. It's a lot of paperwork. And like I said, 80% of the business are being turned down. With us, it's a very simple process. It's a one-page application, bank statements, business bank statements. We do soft credit pulls, and then, you know, photo ID, you know, and we're on to get you the funds.
Well, so because we with John and I on the NBA Button Man, even in theory, we're a little like stringent on who we work with on the sponsorship side. So I sat with Jason, we got a nice cigar, we chatted, and the one question I had is, the one thing that scared me about MCAs, merch cash advances, were the whole credit card thing. So I remember I had a bad experience where somebody was like, we're going to give you money, and we're going to take it out of your credit card, and all that kind of stuff. It's a little process, a little murky for me, versus there's other ways that you pay back.
Right. So if you are a high volume, like a restaurant, club, a gas station, a retail store, you do a lot of volume with credit cards, the lender's going to look and say, listen, let's do this payback through your credit card processor, and they're going to take a percentage. So if one day you do $1,000, they take a percentage. You take $500 the next day, they take a percentage of that. It's a set percentage, okay? But for the most part, it's going to be taken out of your business account. And we have options, whether it be daily, weekly, bi-weekly, and also monthly. Our loans go out from a year all the way up to 10 years. Okay, so we're not just talking about a 2-year loan. On the merchant cash advance side, yes, we're talking about less than 3 years. So if that's the category,
well, that's what I would expect though, from something like that.
Right.
Give it to me fast. I would want a longer horizon.
Right.
Now, let's kind of talk about the elephant in the room: interest rates. What is it? The time versus money proposition. You ever get somebody says, "Hey, pay back your invoice in 30 days. I'll take off 2%." Versus if it's over 90 days, you charge interest. So money's worth more now than later, and money's worth more later than now because if you don't pay it back, right? Depending on if you're the giver or receiver. Right. So I expect the interest rates with that to be a little higher than normal. So if you can give a range of what to expect so people don't freak out and say, oh my God.
Start at 10% and go up from there.
Yeah.
And let's be real.
Yeah.
Okay. You have a 580 credit score. Okay. The underwriter sees it. They know what you've missed. They know how many late payments you have. If you have a bankruptcy, maybe you have a lien, right? Okay. Yeah. They see all this stuff. They're taking a risk and they want to be rewarded for that risk.
Yeah.
Okay. That's natural. Okay. So if you walk in, with a poor credit score, you will be charged a higher interest rate. And if you walk in with a great credit score, your interest rate will be lower than somebody with a 550 credit score. We're not here. Now, we talked a lot about traditional banks. We're not here competing with the big banks. Okay. It's not going to happen. All right. Their interest rates are lower. Their terms are more favorable. Okay. But when you can't go to that traditional bank because you cannot wait, because your credit score is too low,
correct,
or your industry is an industry that they're afraid of and they don't want to work with it, whatever the reason may be, when you can't go, that's when alternative financing comes into place, and that's when JSV Capital can come and help you. It's exactly what it's for. So the interest rates are higher, okay?
Yeah.
But there's a lot of other reasons why you would come to us.
So less red tape. Right. So we're going to wrap up soon, but one thing that also is super attractive about this is, let's just say, sake of argument, you decide to go down that route and you pay, I'm just making this up, a 50% interest rate, right? And you have your payments and things are cooking and you feel comfortable paying it off. Typically, there's no prepayment penalty and the interest accrued is only for the amount that it's earned, correct?
Yeah, that is good. Yeah, typically. And another thing I want to bring up is that if you paid off early, you save on interest, payments, and so forth. So you actually get rewarded for paying off early. Okay. Yeah. And there's no prepayment penalties. So
which I remember I was working on a deal for somebody and they had me look at the contract and they got a really big loan from the bank, and the bank, there was like a punishment if it was prepaid like 3 years earlier.
Yeah, well,
an actual penalty.
Well, because they still want their money.
Yeah, and you know this too. They also sell the loans, half of them. That's the other part too. Like if you get a loan, let's say like a mortgage or any type of loan, a lot of times they sell the loans, and it's like you're cutting a check to A, and all of a sudden it's a B, and it's like you kind of went with them because like relationship banking, and I hate to say this, for the most part, it's dead. I would think.
100%. 100%.
That's insane.
I mean, again, by all means, they're there for a reason, and work with them if you can. We all bank with the big banks, right?
Yeah.
But there's times where you have to look elsewhere.
Yeah.
And that's where we come in,
All right. So for people, we're going to put a link below, jsvcapital.com. We'll put a link below. Tell them New Theory sent you. We're going to send this also on our to our NBA Button Man, our sister podcast, if you will, John Panisi. We sent it to those guys, and just tell them, Tom and John sent you, or Tom sent you, however you find JSV Capital. So we'll put a link below. So don't worry about saying how to find you, but tell us a little bit about yourself, Jason. Where'd you grow up? And give us a little bit about you for those who want to maybe get to know you a little better.
Yeah. Thanks for asking. So I grew up in Clark, New Jersey. Went to Johnson High School. From there, I went to the military, had a stint there, went to college for a little bit.
You in the military? What branch?
I was in the infantry, Army.
Yeah, shit. Yeah. I didn't know that.
So after that, I'm actually a blue collar guy background. Okay, down here in New Jersey, New York, I'm right 20 minutes outside of the city, is the port where all the ships come in with the containers, and right. So I got involved in that at a young age, worked my way up, supervisor, operation managers, worked for a couple companies. And then I actually fell into this niche, and, it started off where I was just doing it on the side for a little bit, and then it was lucrative. I saw who I was helping out. Yeah. I was always interested in my younger years. When I was 19, 20 years old, I did I wouldn't call it an internship, but I was a junior broker for a company called First Republic in Manhattan.
Yeah.
It's a brokerage firm, which now stockbroking is like, you go online, you buy your own stocks. It's a dying.
The world has changed.
Right. It's a dying profession. But I was interested in making deals happen, helping. This guy needs, something. I could help him out because I know this person. And this niche I fell into because that's exactly what I do. And knowing that how many business owners were out there who couldn't get capital, it just intrigued me even more. And I turned it from a part-time thing, turned it into a full-time thing. And this is how we came to JSV Capital.
Love it. Yeah. So just a few shout outs. Shout out to NBA Buttman, John Panisi, my co-host. Shout out to John. Shout out to Anthony, his business partner that he co-founded JSV Capital with. Hopefully eventually we'll have a little conversation with him.
Yes.
And just a shout out to everybody's support to the show. The show is doing really well. The New Theory numbers are up as a result. So I think I'm getting some crossover there. And then we found out that just like Jason, about 20% of the audience kind of came over from New Theory. So our OG New Theory audience, as well as the OG New Theory to Buttman audience, I say a sincere thank you.
Great,
I'm happy that you were able to see my progression, getting a little more serious about the content, a little bit more serious about the quality, and that's it. But we lost our assistant, so I'm gonna have to close this out. So Jason, I'll give you the final words.
Yes.
And then I'll hit the stop button.
Tom, once again, thanks for having me. Beautiful day here to do this interview. And everybody out there, you're a business owner, you're looking for capital, you don't know where to go, you've been turned down by your bank. Visit jsvcapital.com. There are no strings attached. Okay, so when we get your application, we're not going to ding your credit score. We're going to put it with the lender that we think has the best chance of getting approved. If it doesn't get approved, no harm, no foul. Okay, didn't cost you anything, no dings on your credit. If you get approved, you have the option to say yes or no. And if you say yes, great, we got you the capital you need, and we move forward. And another thing, one more thing that I forgot to bring up was that in 30 days, 45 days, if you're on track to making those payments, okay, we can re-up that loan. Okay, so if you took out 100,000, you paid it down to 80,000, but now you need another 50,000. We can come in and get you another 50,000. So we can keep, I don't want to say recycling, but keep upping that loan amount. The more capital you need, we can keep doing it. All right. So that's another thing to think about as well. Almost like a line of credit, but we can just keep adding to it. All right.
Yeah.
So jsvcapital.com for all your business lending needs, guys. Thank you so much, Tom. Thank you for having me.
It's our pleasure. And Serendipity is here. She's our special guest. You guys are winning her.
And of course, the black cat sits on the couch while we're doing the interview.
And gives us good luck.
And gives us good luck.
So just shout out to Serendipity. Mention Serendipity in your comments below. And this is Tom Lebeck and Jason. And I'm just going to hit the
Thank you, guys.
button.
Take care.
And thank you so much.